I'm just in the process of getting the account approved and then moving money over. But yeah, a lot of cool stuff happening. H Ball, you're in the middle of that. You're also with a broker dealer or something similar under FINRA or NFA. Oh, you might examine August. I'll probably start taking the test in July, I believe, something like that. Start in June, take it in July. And I'm really happy because those are more currency focused exams. So I'm like trying to collect them all like Pokemons. I have the series 663. I'm gonna have the 3, the 34. I really want the 7 after this. I have the basic SIE one. I also have like the life insurance ones as well. You're gonna be in Europe? Nice. I heard the 7 is the hardest one, Chris. Yeah, I really want that one though. I should have took it when I was at my old firm. I should have took it there. They were willing to like sponsor me for it and give me all the material for it. But I was already leaving, so I've heard one of my colleagues really went to battle with the 7, and I really want the 7. Oh, Chris is here. My bad. Chris, I'll hand it over to you, my friend. Thank you guys for giving me your valuable time. I really appreciate it. You guys have a blessed one. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Tuesday. Welcome back. Just had a couple chart alarms. I got a chart alarm going off on old Walmart hitting $100 today for a second. Walmart is up to 100.88. My covered call, I believe, is up in that region on Walmart, some of the shares that I have. So I have a collar trade on Walmart, 674. Come on, Spotify, you freaking turd. Get back below 670. It's still at a profit trap, but my gosh, man, don't go up. Come on. Walmart. Collar out to August with a $100 covered call. If it gets called away, that's still going to give me a couple of bucks. I think my break even's like $89. Let me go into my tracker here. So Walmart. Break even is $93. So I make $7 a share. Let me see what those chunks of shares are. So $7 a share, 200, 200, 300, 200, 100. Oh, fudge. I think I fat fingered that thing. So 200, 200, 300, 200, 100. Oh my gosh, dude. I can't add this morning, I guess. Be quicker if I just added them up manually. There, 1,000 shares of Walmart at $7. So $7,000. If it stays above 100, I can also roll it. We'll see where we're at by August. SPY, what's going on here? That's a Friday trade. That's a today trade. Okay, this account. That's why I was checking my DTEs. So this account right here with a collar, we're at 593. I'm going to roll this collar again. Maybe I'll roll this out to Friday. So if I roll that beautiful bean footage, so I can roll this out a day. What's Friday? The 6th. Friday is the 6th. So I can roll this out, grab another $120 or so. Let's try it. Let's try 120, or let the weekend. I'll let the weekend marinate. Let's go to the 6th. Let's go to the 9th. So let's roll the 9th. So the 9th, sit it over the weekend, still keep the strikes the same. Can I roll this strike up at all? Make another $100, still get credit. Roll this up. That's break even. So I can roll this up $1, get another $70. So this increases by $170. So you might roll this collar for 70 cents. Let's try this one. 70 cents. Have it on 79 cents, 69 cents. My auctioneer voice. It's terrible. All right, all right, just filled that for 69 cents, and that gives me $169 extra income by a Monday roll. So SPY, let me update this one. Okay, so now that break even rolled to 6/9 expiration, 584 by 570. I want to look at the debit on the 570 because in case this were increasing in value, it's a 29-cent debit. So just in case if we had like a downward move in the S&P and this 29 cents became, you know, $1.29 or whatever, $2, then I might just take profit on this as well. Excuse me, so I can lower the cost basis. And that was 69 cents credit. So new break even goes from a 575.43 minus 69 cents, so 574.74. Okay, so if I get it called away at 584, I've had this trade open for 2 weeks, and I've generated enough option income to pull in over $920 in 2 weeks. So it takes money to do it, but this account came to me fresh like 2 weeks ago, and this is one of the first positions that I built. So it's already up $1,000 year to date in 2 weeks. You know, if I did that out, say I've got 26 weeks to do that, I'd make about 26K in this account. Like, that's not bad. It's not bad. Obviously, I'd like to it's not the only trade I'm going to do, but as far as just like generating some income in this environment where I'm not deploying a bunch of capital, I'm going to wait this stuff out. So, anywho, all right, what else we got going on? Clean setup for weeks. Well, what's the setup you're looking for? I mean, I think that the market is sideways. I think we're still dealing with basically a noisy zone where the market is just trying to melt up. You know, I have some interesting podcasts that I listen to that kind of give me a well-rounded kind of macro view, and it's still quite polarizing to consider where people are at. Some people are again 60 plus year old, 70 plus year old, you know, former Fed economist, blah blah blah. I mean, he wouldn't talk a second about the charts or the markets, but he just said we're like in a recession. If we're not in one, we're going to be in one. Kind of the real hard data that he's seeing on his, and I'm not taking anything away from his deep dive, but if it's not translated into like, I just think that economists need to recognize that this doesn't have to be reality, right? Like, nothing about this has to be real. And unfortunately, there's so many things that can fuel this market higher without the good data underlying it. You know, I mean, we had 10 stocks carry us to all-time highs all of last year. That is why they rotated hard this year. Now we have those same 10 stocks doing it again. We have 9 companies or 10 companies right now that are over $1 trillion in market cap. They will control the market cap weighted indexes like the SPY and the Qs. So, you know, to have this macro bear theme, it doesn't necessarily have to translate into what the markets are going to do. You know, I mean, I think that obviously the markets are forward thinking. If the markets are thinking that things are going to be bad, you know, even this data here, initial jobless claims. Okay, even this data here, is it spiking to a discerning level or a concerning level? Not really. Now, also, I mean, the next layer of this is, are you questioning the integrity of this data? Because this week is a good example. We have non-farm payroll on Friday, correct? Look at our non-farm payroll. Let's go to the Edge Finder. Okay, let's go to non-farm payroll. And what we have seen lots of the last, 3, 4, 5 months has been crazy amounts of revisions. And it happened through the Biden administration too. But we saw non-farm payrolls come out with these crazy numbers, like hundreds of thousands of jobs, and then be revised really, really low. Where it looks like it's good on paper, and then the next month it's a horrible revision. Wasn't it? Was it March of last year? Was it that long ago? This year flew by. If that's the case, was it March of this year or March of last year? Hey, it could have been March of this year because it was just drama city. It had to be March last year, where it was like 818,000 jobs actually didn't happen. Like the numbers were fluffed and revised so badly, it was like 800,000 jobs were not accounted for. So anyway, let's go to labor market data, non-farm payroll, and see how far back we can go. So, I mean, look at this revisions, right? Revisions down, up, down, up, down. Like these are pretty all over the place. Revision way lower, okay, way lower, way lower, way lower, way lower, way lower. I mean, it's all over the place. So we're going to have more data on Friday this week. What is non-farm payroll? What's the expectation? So Friday's data is U.S. jobs expected to be around 130K. Previous print was 177. Unemployment rate's been pretty steady at 4.2. We have Jolt's job openings this morning. What'd that do today? 7. Did it come in? Should have been in. Jolt's today came in 7.39. So there's actually an increase there. Slightly better than last month. Okay, good. So does that mean we have more jobs available? Okay. Are people going to take those jobs? So anyway, I don't know what I was getting at, other than information is all over the place. I mean, if you are a trader, okay, you follow price. Price action to me is what's going to tell us. If we want to find out, are we in a recession? How about you follow the market? I mean, one thing that's going to be very difficult to do is, timing a top, timing a bottom can be pretty difficult. I think for the most part, you can get a vibe, like, and that's why for these last couple weeks, I mean, I keep seeing this chart. This is a weekly time frame. I keep seeing this chart, and I know that this market should turn. Okay, based on trading experience, I know this market should turn a little bit, go back down. Okay, now whether that happens now or happens at a slightly higher high, I think we still should turn. Okay. Now, in the past, I might have been a little bit more aggressive on, like, I'm going to be bearish right now. I'm not. Like right now, what I'm doing is I'm just going to wait and see if my patience will play out. I'm looking to see if we get a dip or something that looks reasonable to buy, or a dip that kind of pulls back and kind of resets this melt up a little bit. And then this is where I think the economy would feel a little bit more real. This to me is real, right? We had MAG7 rotation, tariff drama. We take away some of the sting of the tariff conversation. I saw headlines last night that now what is the U.S. trying to do? They're trying to basically encourage every company or every country in the world by this week to give us some type of agreeable trade agreement. So you tell us what you want, we'll tell you what we think you should have, and then we'll see who comes to the table. I don't know what that means. I don't know if that is like, well, we are saying this because no country is just lining up to just automatically just bow to us and say we want to do business with the US. I don't know. Okay, but we just did another pause on China into August 31st. So US China has now been pushed out to August 31st. This 90-day window that's up in early July could also be extended. Like, this is what 2025 could be. You start with you snow globe the world and you shake it all up, and everyone gets panics for a second. You feel like you got some systemic risk, and then the threat dissipates. Okay. And so I think that a reality check would be, okay, so the market reflexively came back a little bit, got back into some kind of bullish territory. I think what's going to drive traders crazy is, let's go to a daily time frame. And again, give me some feedback here. But would this drive traders crazy in 2025 if we are down below the 200 moving average with the death cross, right? And then back up above the 200 average with a cross, and then back down below the 200 moving average with the death cross? That would be that. It's very hard to position for that, right? So you have a high, you have a low, you have a lower high, you maybe have a higher low, and this might be the market. Now, that to me would actually be a real market, because we don't know if it's going to be crazy high, awesome optimism. We don't know if it's going to be crazy bad systemic risk bearishness. but the market can survive in here and have some equilibrium and not necessarily have to go anywhere. But I can trade in that environment. I can still make money. It's going to be less, right? But I can still generate income. So I don't know. I just think we have to be prepared for a lot. I'm trying to be patient. I'm trying to be pretty patient. Today's currency strength, if I can spell it. Okay, so what do we have in currency strength? Well, I'm happy to see that the Swiss is the weakest today, as was the Japanese yen. That makes me pretty happy. The dollar is going back up. I said watch the lows on the dollar. I don't think the DXY is going to go too much lower without having a pullback, right? So the dollar index is still kind of messing around with this 98 handle. Don't be surprised to see the dollar, use this level as a support level, maybe a range bound here. Okay. There's a lot of consequences in the dollar. If we go lower, this is gonna cause a lot of pain and grief in the bond market, which will impact global liquidity. So, I mean, for anyone that's cheering on a weaker dollar, I think there's bigger problems if that is the case. I think you'd almost want to see that. I mean, and I know for currency traders for a lot of years, it's been like, this one move of the year was crazy, but other than that, Forex trading could be somewhat, boring. Like I say boring as far as like big moves, right? But scalping opportunities, there's tons of opportunities in futures trading and scalping. I mean, there are 23-hour markets, 24-hour markets. There's always opportunities to align. Excuse me. But if we get a channel here or a range, I mean, this is probably a good thing for the dollar. I don't know if this wants to stay back in this range or continue to weaken. But below, I mean, literally below 100, below parity on the dollar is not a good thing. The more downward pressure we have, the more the bond market feels it. If the U.S. bond market is going to feel some pressure, we have a global amount of IOUs that are going to be. Yeah, it's like, are they still good? Are we still going to have successful auctions? Are we doing mostly short-term auctions instead of long-term auctions? This is the whole weird conversation in 2025 that's accelerated this move towards is gold better? I mean, I don't find these charts. If you can compare, I need to find these charts. Let me actually ask a buddy of mine. Let me ask him right now, actually. What was it? Okay, because what I wanted to show was if I compare the S&P and gold standards, or compare Bitcoin versus gold, or compare the Qs versus gold, or compare the housing market versus gold, you'll see that it's a very different story compared to just the index versus US dollar. If things are priced in dollar terms, all we've had is a debasing currency and crazy amounts of appreciation and everything to make up for that debasing currency and weakening purchasing power. Right. And I think that's why 2025 has felt very different, where gold has become a really well cemented global asset that is being treated as such. The speculative side and kind of the future of decentralization perhaps is what Bitcoin represents. Right. I'm still pretty optimistic on Bitcoin. I like the potential upside. I don't think it comes without risk. I think there's going to be risk, but the volatility on Bitcoin has gone down dramatically. A pullback of what was 60, 70, 80% is now maybe pulled back within 20 to 30%. I would say probably point for point, it's probably matching the Qs. I mean, we had a pullback here of around 31%, but the Nasdaq pulled back 27, 28%. That to me was a huge change this year in Bitcoin, to see that the vol is actually in step with like the Nasdaq. All right, he says I can go SPX. Is it SPX versus gold? Oh, you got to do the math. Okay. So SPX divided by gold. There we go. Or GLD. Or XAU. Try this. Son of a biscuit. All right, I'll figure it out. Anyway, let me bring this up for. I'll save this for tomorrow. I just don't want to derail the session, but the charts are pretty interesting. If you compare, SPX by itself, SPY by itself, Qs by itself, and then you compare it with overlaid gold, you'll kind of appreciate how bullish gold has been and how in asset terms with gold rallying like this, housing prices haven't increased at all because of the increase in gold prices, right? Here's an example. Let's take the average. This is just a little side conversation today, but the average home price in the U.S. I'm going to make the number simple. Let's say $400,000. Okay, the average home price is $400,000. So let's say that the average home price in 2025 is $400,000. Let's say the average home in the U.S. in 2020 was maybe $250,000. Okay, so pre-COVID, before things got nuts, we've had a huge appreciation in home prices. It's the same house, same square footage, same rooms, same bathrooms, same dimensions, but somehow that house is worth that much more. What's 150K? Your house is somehow worth an extra 37.5%. So you mean to tell me that homes have appreciated 37.5% in 4 years? Okay, or 5 years. So what's the average home in the US in gold? Okay, so if you take 2020 gold, so 2020 gold versus 2025 gold, what's that home worth now? Let's look at the home price in gold. For the year, gold was, let's go back to 2020 here. So gold, we'll go to the start of the year. So gold was $1,500 an ounce. Okay, so we'll take the start of the year. We'll take a $250,000 house divided by $1,500 an ounce. So you've got about 166 ounces of gold. So 166 ounces of gold buys a 250K house. How about now? Okay, and remember, home prices have gone up. Okay, but what about gold? Right now at this price, we can even say the start of the year, even though we've gone up 20+%. Right now, I'll do two levels. I'll say the start of the year at 2634. Okay, so $400,000 over a $2,600 starting ounce, 153 ounces. See what I'm saying? And if we go to spot price right now, $3,300 an ounce, take that same $400,000 house, divided by 3350, 119 ounces of gold. Okay, this would be beginning of 2025. This would be beginning of 2020, right? I could do the same thing on Bitcoin. If Bitcoin in 2020 compared to Bitcoin now, how many Bitcoin buy a house? It's kind of nice to know that an asset like this is appreciating. And even though things on paper price-wise are more expensive in dollar terms, it's less than gold, right? It's less than Bitcoin. Like, this conversation is getting more and more real today than it has in a long time, because it's showing that these other assets with a debasing currency with infinite amount of money printing, this is why it's a problem. At some point, you want to have some type of asset that is appreciating enough to give you deflationary prices so things can get cheaper, so people can live better. This is what's so frustrating about things getting more expensive. You're reading stats right now that people are selling homes at the highest level, but they're sitting in the markets because why? You're trying to get out at the highest price to do what? Sell at a great high, but turn around and buy at a 7% interest rate with a house that's way more expensive in money terms. That makes sense? All right. So anyway, point is, this is a crazy conversation, but I think it's encouraging to know that if you have gold in your portfolio, it helps. If you have Bitcoin in your portfolio, it helps. Dollars are going to be dollars. The fiat system is forever, I'm not going to say it's going to be doomed, but something with accounting, like some type of creative accounting, some type of fiscal reset is likely going to happen. And I don't know how ugly that gets. I don't think the world ends. I mean, my gosh, we thought that this year the world was going to end. We thought that 2020 the world was going to end. The markets have a way of showing some reflexivity, right? But I just think having this in mind is like, this is important. This is an important investment. Bitcoin, although it was risky, 7 years ago, is a lot more mainstream now. It's backed by some of the largest asset holders in the world. Institutional money is still following along, and retail, it continues to grow. Crypto wallets are opening every single day. I'm not nearly as speculative as I once was. I mean, I traded altcoins and things back in the day. I never chased Doge or Shiba. I focused mostly like maybe 5 or 6 coins, and then it was like I rolled everything exclusively into Bitcoin. So all I focus on is Bitcoin now, which I'm happy with. But does that feel nice to know that, if you own gold or own Bitcoin, that things are getting cheaper to buy as opposed to more expensive? Like, look out 10 years and think, this home that I have right now that I just moved into, like this weekend, this home in the next 10 years, is this home worth $1 million? No, I know what I paid for it. It's not worth $1 million, but in dollar terms, maybe it is, but that's called inflation. So anyway, there's my sidebar for the day. Diversify. I think having gold and Bitcoin in the portfolio makes a lot of sense. Do I consider Ethereum? I do. I traded Ethereum quite a bit the last, 7 or 8 years, but since 2022, after the big like deleveraging and reset, I went more into Bitcoin. To me, it was an easier chart to read. I wasn't sure of the proof of concept or the network effect of Ethereum. It's like Bitcoin to me is like the S&P of the digital world, the decentralized world, and also, I mean, at some point you're seeing what's happening now is more corporate bonds. Countries are building, Bitcoin-based bonds. And I think what it is, they're trying to do this. They're trying to run some type of parallel system where you can have fiat and you can have Bitcoin. This can do what it needs to do for the checking account. This can do what it needs to do for the investing and savings account, right? So there's ways to do both. It doesn't have to be like Bitcoin has to replace everything. It's like you can run the world in fiat terms, but you got to have something that's appreciating. You can obviously have gold as well, right? So gold, Bitcoin, dollar, like somewhere the world hopefully has to figure it out. I don't know what that looks like. I just know that it's tradable. I know that this is an important thing to have in my portfolio. So is this. I'll even throw in silver, right? Because in silver terms, I've also seen the same type of conversation. A $400,000 house in silver terms. Let's go to XAG USD. Okay, silver since 2020. Look at this. Silver started at $17.78 an ounce. So that same 250K house in silver for beginning of 2020 was how many ounces? That'd be 1790. So we take a $250,000 house divided by 17.90. You're at 13,966 ounces of silver. So we'll just say we'll round up to 14,000. Okay, let's take silver today. And the house prices have gotten more expensive in dollar terms, but silver is at 34.46. So let's go $400,000 home divided by 34.47. Now it's only 11,600 ounces of silver. Okay, and this is now a $400,000 home in silver. Now is only 11,600. So this is also appreciated. Silver has appreciated, which makes this cheaper. Even though the home is more expensive in dollar terms, it's cheaper because of silver's appreciation. Bitcoin, same thing. Right? I know BGP, I'm seeing that. Some experienced traders say, right. And you know what? Look, there's an argument for both. I think that people that don't understand Bitcoin are definitely saying that 10-foot pole. I think that a trader would have to acknowledge right? Be asset neutral, be strategy agnostic. A trader has to acknowledge the potential asymmetry on Bitcoin. Look, you can go in and trade Bitcoin. Why is this a bad trade? If I take a trade right here with a stop loss here, and this thing can go up and make me 2-to-1, why would I not consider that trade? Does this matter if it's, gold? Does it matter if it's a stock? It's tradable. So as a trader, that's what I am. I can make money on Bitcoin. But to me, I consider myself a bit more of a hybrid where it's like I see the benefits of trading Bitcoin, but also holding Bitcoin. I mean, there's not a lot of things that I would say I'm super optimistic about. I think we are getting this I don't know, we're getting like this open reality of things aren't as great as they appear, right? The world, it's like, I don't know, man. And I don't want to sit here and be, like, I hate being negative. There's too much crap out there to be negative and too much things to make you worry. And that's what like drives all this emotional decision making. It's like, but if you think about what makes you like optimistic, I'd like to be able to see 10 years out, 10, 20 years out and know that life can be better, not worse. I just had a conversation yesterday with my sister who's like 28 years old. Okay. She is terrified for what her future looks like because she's like, this whole AI thing, do you think it's going to go away? You think she's like, it's going to displace so many workers. I'm like, it is. I know it is. And I'm like, and it's not going to stop. She's like, well, why? It's so bad. It's like, doesn't it change? Like, wouldn't it make things worse? I'm like, not in the U.S., not in the world. Why? Because what drives financial markets? Profits and greed. And if you can take a company from a 20% profit margin to a 50, 60, 70% profit margin, guess what's going to happen? You're going to drive all systems go to that 70% profit margin. So unfortunately, humans will be the resource that isn't necessarily needed, but there's going to be something. I don't know. And maybe there's so much profit in the whole AI race that there's universal basic income, right? The bottleneck would be that we can't actually support it. Right. So I don't know if today sounds like a big rant here, but it's like I'm trying to be optimistic. I'm trying to talk my sister into like the next 10, 15, 20 years are going to be insane. Like technology is evolving so quickly that the only thing that can slow it down is probably our inability to support it. If we build out these data centers, if this CapEx spending goes nuts, it's going to happen. But if we can't support it with better energy, with more efficient energy, then it will clearly bottleneck and will slow the growth. So I almost think like we would get in the way of the innovation, but I know those alternatives exist. We all know this, right? We don't have to just rely on oil. It's like there's oil, there's natural gas, there's liquefied, there's hydro, there's geothermal, there's nuclear, there's clean, whatever. There's wind, there's solar. It's like if we harness any of that stuff in any alternative way or make it more efficient, you'd think that we can do whatever we want to make more efficient energy. Now the question is, does that make it cheaper? I don't know. I hope it does. So point is, to be a glass half full investor nowadays, you got to have something that keeps you positive. Gold makes me a little bit more optimistic for the future. Bitcoin makes me a little bit more optimistic for the future, right? Investing in the markets, yeah, I can be more optimistic in the future because I know what they're designed to do. The S&P is designed to go higher. The Nasdaq is designed to go higher. When will they not? If we have a recession. When will we have a recession? Probably when jobless claims. Okay, you go initial jobless claims, continuing jobless claims. If this data starts to trend higher, and this is what we're going to see week to week and see this in the Edge Finder every single week, if this starts to go higher, okay, that is not a good thing. If initial jobless claims and continued jobless claims are starting to trend higher, probably not a good thing. In fact, what is happening here? Is this something that we should be watching? Continuing jobless claims are trending higher. We've had some lows here back in December of last year, back into April of this year. We are starting to see higher levels. Does anyone know that last year, do you know how many tech jobs have been lost? Microsoft has cut workforce, Meta has cut, Google has cut, Apple has cut. Do you think those jobs are coming back? Not. They're not coming back. Why would they come back? If those companies don't have to hire new people, they're not going to hire new people. This is something I'm going to find this. I know I took a picture of this weekend. Let's go here. Let me see if I can find it. I've got a bunch of pictures in here, but I listen to all these podcasts. At the gym, typically I find these, data points. So I'm just going to flip through them really quickly, and I'll walk through it. But basically, it looks like this: jobs, cuts, and like how many hires on a histogram now are showing job hires. MAG7 is hiring like nobody right now. Let me see if I can find it. Okay, it's right here. I'm going to send this to myself. Growth in total employment in Apple, Microsoft, Alphabet, so Google, Amazon, Nvidia, Meta, and Tesla. Okay. Fed starts raising interest rates. This is not like it happened overnight, by the way. This is happening since 2022. Okay, so in 2022, those companies with growth in total employment, let me just share this chart. This is a good one to discuss. So here, and I will mail this to myself. All right, jobs, send. Okay, let me see when they get the email. I'll share that. It's a pretty interesting chart. Okay, so let's see if this pops in. Come on. Sometimes the Apple phone is slow to send. Anyway, let me go back to it before I lose it. So let me give an example. Total employment growth in the MAG7. Let's go back since let's go back to 2017. Okay. So I'm gonna keep this up. I write this out for you. It looks like this. This is the chart that I'm going to show you. You have a chart like this that shows total growth. Okay. So total growth, total employment growth in MAG7. All right. And percentage year over year, percentage year over year. We'll start in, we'll go 2011. So 2011, 2012. Let me see if the email just pops up. If it doesn't, I'll just do this the old school way. 2013, 2014, 2015. I'm obviously going to run out of space here. Fun. All right, let's do this. I'll go 2016 to now. I think I can squeeze it on here. So 16. Okay, then we'll go 17. And we're going to talk about this more on June 16th, by the way. I'll be able to deep dive a little bit more into this, but I just think this is, I just listened to a long podcast last night. I was on the road until like midnight. So yeah, we're going to go after it. So 22, 23, and 24. And I'm not even sure if there's a data point for 25 yet. There is not. Okay. So here are the crazy numbers. 2016. I'm just going to type in the percentages here. So 2016, we had year-over-year employment growth of 24%. 24%. Okay. 2017 was 40%. So it jump up. Let me do this. So about 24% here, 40% here. 2018, 14%. So down. Okay. Then we had 2020. We had a skip one. 2019 was 18%. The hell. 2016, 24, 40. It's 14. There. 14, then 18. 14, then 18. There we go. So just a little tiny sliver higher. And then 2020 was a big jump after, jobs were cut. Everyone's going home to work or not work. And then all of a sudden we had a big boom, 40% post-COVID. So another big jump here. So back to 40%. So another big boom in total employment growth. 2021, 21%. Okay. So there, 2022. When do you think companies started to say, we don't need to hire as many workers? We don't need to grow with workers. When did that happen? Oh, I don't know. How about this last bear market? -1. Okay, how about 2024? 2%. Do you think this is going to change? Do you think in 2025 this is going to change? This is my concern. The biggest companies in the world are not trying to hire more people. This is AI now. And this is what I think the future looks like. They're not trying to hire more people. They're trying to do more with less, drive corporate profits, and that is the business model, right? So the days of more people are on the decline. Like if this is what growth looks like going forward with companies hiring like -1% workforce, 2%, 3, it's like they've been laying off workers for years now. So this is the adapt or die mentality. If you are not going to adapt to what the potential future is with companies not wanting to hire, basically a job available will be taken. That job available is possibly going to require the skill set of what maybe 5 or 10 people have now, and it's one person can do that job because of AI, because it's a productivity boost, right? So, I mean, I think that we should be embracing some type of AI skill set. It's going to be something that's ever evolving. It's going to be changing, but this is a big difference, right? This is a big difference in the future. So that's what I'm saying. Like, I think this is coming for us, whether we like it or not, you know, and I think it's unfortunate, but I think that's the reality that we have to deal with. So that being said, there's my long public rant on the day. I'm trying to be a glass half full guy, but to do that, I've got to have investments that I think can work on my behalf, as opposed to, I need to require an employer to take care of me, especially when an employer doesn't want to hire people. That's a pretty tough racket, right? So I hope that's not the case, that humans aren't necessarily displaced, but I think if capitalism has taught us one thing, it's that greed and profit is above all else. I mean, the amount of power and lobbying that corporate America has to get the nastiest things in our houses, in our bodies, in our environment, because it's cheaper to make and it's easier to make. That's a huge concern, but we've dealt with it for a long time because US has put profits over, humanity for a long time. So anyway, it's you can take it for what it is, whether you want to be optimistic or pessimistic. Like, I think as a trader and investor, you got to be optimistic or else you'll never play this game. If you want to survive these markets, you got to have thick skin. You got to take some punches on the face a little bit. But there's ways to survive. So I want to say I hope things can improve and get better. You just never know. You never know, right? So where we are today, SPX today, we're still sitting on a weekly time frame. Going back to the charts, okay, this is highs and lows. If this market melts up here, fine. I don't think it should, but if it does, I'm not going to fight it. I think that there's some heavy resistance maybe around this round number at 6,000. What happens this week? I don't know if this data is going to be released, but like, what if it's like really, really quiet? So all these countries that we're trying to tell, hey, get in line, tell us the agreements you want, tell us the terms, let's do some deals. What if it's really quiet? Does that change the narrative at all? I don't know, because maybe the US is just going to pause more. Maybe this 90-day window is another 90-day window. Maybe we give countries more time. So I don't know if the markets take that with positivity or negativity. I don't know. So all I'm saying is, from a technical side, and I did this on a bunch of charts here. Actually, let me check one thing really quickly. I've got a couple trades running on SPX. It's been drifting a little bit higher this morning. So let me check SPX this morning. It's kind of back to break even, unfortunately. You piece of crap. So I got one that's up about 30%. The other one's flat. We're at 58.60 right now. 59 is my gamma level. Are we getting up? Where are we open today? 59.30. We getting up to 6,000 today? Guess we're about to find out. So these are my biggest gamma levels. 6,000 is a round number. Are we getting there today? I mean, plus or minus move was not 70 points. I can tell you that much. Yeah, I think that's a stretch. If we get to 6,000, that's a big stretch today. So I've got some sell calls up here around 59.90 and 6,000. I'm just hoping that price will stay there. It's out of the expected range right now, which is good. I might just have to sit on these trades a little bit longer. All right, back to the charts. So let's take a look at this workspace. Chandler, let me know if we got to run here in a few minutes. I'll look at my Discord. If you need to take me out, if James is coming on after me, let me know. Let me go to a couple of charts. I've got Mighty Macro, and I have harmonics and pivots. So between these two workspaces, they can be a little ugly. But SPY, SPX, what do we have going on here that I think a pullback is coming? We have divergence on the MACD. We have a crossover line. We are not quite there, but we are close to overbought conditions with bearish divergence, right? High, this high. If we're having hidden bearish divergence, that means that price is potentially squeaking out slightly higher highs. But if relative strength is disagreeing, that is hidden bearish divergence. Also, MACD histogram and a signal line is bearish divergence. Money flow has gone stagnant since this high. If money flow is not increasing again, I think that's a room for prices to decline. Okay. I'm the closer today. Okay. Coffees for closers. All right. Excuse me. So that's my MACD. So MACD, relative strength, and the money flow indicator. I see just clean technicals on a daily. Why would we be crossing over? Well, because we would kind of run out of momentum. We'd have a lot of disagreement. We're kind of lacking the thrust and the momentum and the breath to get us there. A weekly chart, maybe there's a bit more room, right? You go to a higher time frame here, weekly chart, what do we have? Well, we have a signal crossover line, we have some positive divergence or convergence rather, and then we have relative strength that was oversold, which we saw that during the April low, and this weekly chart may just keep freaking melting up. And until we get overbought conditions, like maybe this has the opportunity to kill, so the weekly chart gets up to, relative strength hits highs, money flow continues to go higher. So daily chart, weekly chart telling a very different story. Even though we've been sideways for 1, 2, 3, 4 weeks here, if the weekly chart wins out, we are still going higher. The daily chart, I think we have a pullback first. A pullback here in the daily chart does not necessarily disrupt the weekly chart. It just means it's a pullback because this could continue to go higher after a dip and a pullback, right? All right, one more chart here. This one's a little messier, but bear with me. Okay, all I'm really watching here is, let's go SPY or SPX or XSP, right? So look at my zigzag indicator, very common move for tops and bottoms. We finally had a topping point right here around 59.67, that high that we had back on like it looks like May 19th or so. That was after the Friday downgrade, the Moody's downgrade, and then Monday was an opening low. That day was a little silly, but that looks like the zigzag called a bit of a top. Is that a guaranteed top? Not necessarily. I mean, we can have obviously like little waves, but if this is any indication of trying to find a high here, what else do we have? Well, if price goes higher, we're getting disagreement in momentum. If price goes higher, we're getting a disagreement with relative strength. Again, price momentum on a daily chart are showing a pullback is likely. Okay, how about a weekly chart? Weekly chart, same thing. So have we disagreed with the momentum yet? No. Have we disagreed with relative strength yet? No. Are we overbought or oversold? No. So the weekly chart's still in the middle. Let's go to the monthly chart just for fun. Okay, monthly chart. This would be interesting because what do we have here? There's a high on the monthly chart. Okay. If we somehow crack all-time highs on the monthly chart, we might see disagreement and disagreement on the monthly time frame. So even if we do have a melt up to these all-time highs, I'm still extremely cautious of a pullback. And in a way, it's like from the technical side and having 55% cash at the sidelines, like I want a pullback to position accordingly. Okay. So, I mean, the monthly time frame, this turns out to be this long wick. Is this a big morning star where we have a decision bearish, big indecision, decision bullish? Is there follow through there? Well, if so, then maybe we do get back to all-time highs. June, July is usually not a disruptive time. June, July is usually like pretty chill. Last year, July was pretty nasty. Like mid-July, we started to top out. We had that Bank of Japan deleveraging through August. And so mid-July into like August 7th, that was the low last year. That was a pretty nasty window. But I don't know if it's going to be the same in 2025. Okay. So between the daily, weekly, monthly, the daily is kind of screaming and begging for a pullback. The weekly, maybe not so much. The monthly, if we do get to highs, I'd be kind of questioning the follow through of those highs. Okay, so just putting some simple technicals into the equation. You know, MACD is showing very different signs on a daily versus a weekly. I think a pullback would be great. I would love a pullback. It doesn't really change the support that this market can have. A pullback is very well supported. Okay. But what would drive, I think, traders crazy would be to see this market give up this support. If the market gives up this support, it's going to be in question of whether or not we can sustain this rally. Maybe the market peaked out here. But I think if we at least hold this level, okay, we hold this level, okay, fine, more chop. If we come back and fill this level but bounce aggressively, it shows that there's dynamic support right in here that the market's trying to hang on to. Okay, the other way that this just kind of slowly melts up as we hit the highs, then we have a pullback, and this would be a larger head and shoulders. But I just want you to be prepared for a pullback that might be into double digits. If we hit this high and we pull back to a right shoulder, this is left shoulder area, this would be right shoulder area. That's a potentially, 7% pullback. So can we pull back 7 to 10% to overshoot a little bit? Yep. So, 5, 7, 10% corrections could make some sense. Just depends on how nasty they get, obviously. But I'd still look at that as an opportunity to be support, like hopefully support. Big jump in volatility. Maybe there's some good trading opportunities day to day, week to week. But I mean, let me ask you this. How many of you have been having fun these last 3-4 weeks in the markets? And if so, what have you been trading? What have you been doing in here that's been generating daily or weekly income? I want to know. I know what I've been doing. It's mostly day trading. That's the only way I made money these last couple weeks, other than weekly covered calls. I'm selling some puts here and there on stocks. I'm doing some IV scans, but that's about it. I don't see this market as being like amazingly tradable right now outside of waiting. If you're patient, good. Still patient, still waiting, but it's mostly short term. It's mostly a short term focus right now, and we are right back up near this melt up high that we had with the U.S. and China trade agreement and the first pause. Now we pause it again towards the end of April, or I'm sorry, end of August. So 59.67 again, just shy of that 6,000 handle. We do have non-farm this week. Is non-farm going to be enough to drive the market up to 6,000 and then be a reason that it craters? I don't know. I mean, it craters is a bit extreme. I'd say just corrects. Okay. But I just wouldn't be terribly shocked to see the market reject here, or maybe reject off of a round number, and then we pull back. To me, a pullback is still in this area. That's still kind of a big pullback window for me. I don't know if I'm going to hedge at this high. I think I'm going to hedge at the all-time highs. I think that would be a reasonable pullback. Again, it'd be a cheap hedge. It'd be like a quarter 1%. I'll play the hedge, see if I can get a move from highs around 6,100 back down to maybe 5,800, and see if that pays out pretty well. I could probably put a $500 risk on that to maybe pay me 2K or better. I'd structure a futures trade or structure a SPY or Q trade like that. Okay. All right. Day trading is the means I can trade with more confidence these times. Yeah, I mean, day trading is fine. I just think there's not much direction you're getting. I mean, sure, there's some individual movers here and there, but when the broader market is really, really calm, you're not getting huge outlier moves in the market. The broader market, like what's the heat map today? I would imagine it's not all green or all red. Look at this thing. I mean, it shows 62% of stocks advancing, but we're not seeing bright colors anywhere. Nvidia's up 3% today. I mean, okay, cool. So we gave it back. I mean, we looked at Nvidia last week. Nvidia post earnings, so earnings up to 143, almost 144. Gave it back the day after. Now we're back up again. So just a lot of chop post earnings. Market makers did a heck of a job just containing price. Didn't go high enough, didn't go low enough. It's right in the middle. Those trying to buy directional plays on Nvidia lost. So it's like that's a perfect market maker play. Let's go heat map here. So it shows that 62% of stocks advancing. You are seeing a decent amount of red in here, but apparently it's only 30-some%. You just don't see a lot of bright green. Like, I'm wondering if there's a lot of stocks today that are less than 1%. Between the 0 and 1%, that's kind of the dark green. So just a pretty chill day overall. Tesla's up a little bit after being down. Broadcom still ripping higher. I think Broadcom's up at all-time highs now. Yep. So Broadcom just eclipsed these highs. What a freaking turnaround that thing was. And all I got was one little ratio spread in a t-shirt to show for it. That's a heck of it. That's like up 80%. Yep. So, yeah, I mean, I'm not saying that trading is impossible. In fact, trading is actually good. I like having methods where every day or every week I can generate some income that helps move the needle. That to me sometimes is almost easier than feeling like you're chasing direction. You got to jump in and grab onto the coattails of this big bull move. Um, I kind of love being a trader in a market where everyone looks at it like there's nothing happening. What do I do? And meanwhile, I'm making like $2,000 or $3,000 a week on covered calls. That makes me happy. Like there's always ways to make money. I'm just asking, like, what are you doing right now? I think one thing you shouldn't be doing is over leveraging, over risking, and just speculating on like stuff that's not happening. If you're speculating on direction and you're not getting it, um, just don't force it. Okay. Um, all right, let's go a little top down here. I'll wrap up in just a few minutes. I appreciate letting me talk today. I was just kind of sharing some ideas. I'll talk a little bit more about this macro stuff come June 16th when Nick and I do a little special mid-year session. For the top down, we're hanging on to some green today. S&P's up about 1/3, 1%. Nasdaq's up about 0.6%. Dow is up a fraction, 0.18. Russell up over 1% today. What's up, Russell? I think I have IWM. I think I have expirations for this Friday. IWM cover calls. Yep, I'll just roll these covered calls on Friday. Probably rolling up another 1 or 2 weeks and grab an extra. I mean, again, when I roll these calls, I'm usually getting about $1 to $2 on the roll. So just increasing my income, increasing my or decreasing my cost basis. Net profit. If I want to let IWM go at 200, I will let it go 200. If I can find a way to roll this up, if I can roll it up to 201 and get a credit on it, I'll do that as well. So I'll be a little picky on those. Okay, but IWM is actually one of the better performing indexes today. That's pretty interesting. VIX is back down again. So the VIX at 17.94. The rule is 16, 17.94. We've got about a 1.12% move, possibly intraday. And looking at the low of the day, are we going 1%? If we get up to 1%, that puts us around the 59.90 to maybe 6,000. If we're going somewhere directionally, I mean, I do have a gamble level of 6,000. I think it's a bit of a stretch to get up over this like 59.70 zone, but we will see. Plus minus on the day is still. I'm looking at my SPX chain here. SPX chain for today, we're still at about a 90+% chance of profit today. So hopefully that maintains based on the option chain that we just kind of, maybe it's just like a slow grind all day. Maybe it goes slightly higher. Bull put spreads seem to be doing the trick if this market just tries to freaking melt up higher. So as long as we're not hitting like 59.90 is my line in the sand today. So line in the sand 59.90 right there. And just in case, I might actually put on a butterfly spread as a hedge. So I've got a 59.90, 59.95. Let me see here. Do I need this? It's going to be dirt cheap, but if I need it, let's find out. Can I do a? Those are all calls. That's going to mess up my freaking trade. So I buy 85. Is that 15 wide? 25 wide? So 80 cents to make $2,400. I mean, I don't mind that trade. I don't know if I need that trade today. I kind of actually, you know what? I'll do this instead. I'll do SPY as a hedge. SPY. Let me look at the SPY charts for my gamma levels. Is the SPY going to get up to 600 today? It's growing. It's swelling. We've got a nice 595 level in case that rejects. Here's what it looks like. So there's a pretty nice resistance level right here at current price. If this level rejects, there's a pretty good resistance level. So if we kind of hold this area, we could potentially come to the highs. We have not been higher than this. So if I go back on the chart, last highs are on 595.60. So we're not quite there yet. But if this resistance holds, then yeah, we have a little bit of a resistance level. If we break and go higher, there's not much to stop this thing from going to 600. So I could see us getting there this week. I mean, this liquidity level is growing a little bit. This one has already been tapped for the day, but that would be a pretty cheap hedge if we got to 600. So if I went for today's expiration, I mean, expect to move. It's like we only have about a 3% chance of getting to 600 today. So for this to be a butterfly spread, it's just a hedge. If we get to, let's say, 599, like this trade cost me 15 cents and pays me 185 bucks. If I go a little bit wider, cost me 40 bucks to make 260 bucks. It's, a low probability of profit. It would just be a hedge to cover the cost of my other trade. Do I want to take this trade? Let me find out. I want to see if this rejects here. I mean, there's a low probability we get there by Tuesday. Like today's end of day, this whatever, 4.5 hours away. It's a 1% move. We go another 1% today. Seems to be pretty slow. Anyway, if I did this trade here, I would net out about 50 bucks if I win. If I don't take the trade, then I'll net out about $110. So that's the question: is like if I give some back to at least kind of guarantee some profit today, then I'll take that hedge. I'll let that marinate for a second. All right, VIX is down. SPY crossing 595. Let's see if there's some momentum there. Previous highs on the SPY right around this 595.50 level. So is price going to respect this high from 2 weeks ago? We'll find out. What else? Dollar, as I mentioned, be careful on selling dollar into those lows. This is what I was looking for on euro dollar. So euro dollar was up to 14.50, about 50 to 100 points off my profit target. I'm still going to hold this thing. I'm up 180 pips right now. I'm just going to hang on to it. Oil, looking a little bit more upside here. Natural gas, 1671. I've got covered calls on the 17. Gold, okay, fine. Probably just consolidating between this like 31 and 3,500 zone. I mean, it's probably another spot to be building and accumulating some gold. Silver, what an awesome day yesterday in silver. We are getting a nice surge to these upsides. I hope this thing breaks. I've said that now for weeks, but if we break this 35 handle and have some momentum, I think silver has a really nice catch-up trade that can outperform gold, and silver can run. Okay, silver looks pretty darn good. Bitcoin, getting a bit of a bid, possibly struggling at these highs, maybe some accumulation back in these inefficiencies, 101 back to 97. If we're really lucky, I think Bitcoin pulls back between 92 and 87. Okay, I mean, if we're really lucky, although it'll be a little discouraging to see this thing range bound, but if we pull all the way back to like 80 and 75, I think that's a great accumulation spot. But a higher low would be pretty cool. Higher low in here or a higher low in here, I would still be looking to add some dollar cost averaging into Bitcoin. MicroStrategy, get a nice little bump. That's good. I need this thing to be above 2 levels. I need this to be above like 310, and I'll just keep rolling that for income. The other one is a bull call spread, and I think I need that to be above like 375 or maybe 390. MicroStrategy, 375 by 390 right now. That's up about 300 bucks. That potentially pays if we're greater than 390 by the end of this year. Then this is paying close to $1,000. I've got that on 11 accounts, so that's a nice little income trade on some MicroStrategy. Coinbase, fine. If we get some pullbacks and gap fills, I'll probably do some ratio spreads. Copper, I'd love to see this little lottery pick that I did. It was like a $90 risk for $1,400 if it stays in between my green lines. Japanese yen getting weaker today. This is fine. Remember, this is still to me a head and shoulders. Japanese yen, left shoulder, head to neckline, right shoulder. If this accumulates more, I mean, this could be a problem of if the market's going to go into a downturn, maybe this Japanese yen gets stronger. If global yields continue to rise, maybe this yen gets stronger, right? I just don't know if the Japanese yen is going to be a blind spot in everyone's trading plan this year. It was a blind spot last year. Could it be a repeat this year? So just I don't want to be ignoring the fact that maybe this Japanese yen and the yields going up to like 3-4% for Japanese 30 and 40-year bonds, that is attracting way more money returning to Japan versus being used in the US. Because if you had negative interest rates, you are not putting money in Japan. If you have now 3 to 4% interest rates with a safe haven banking system, that money's going back to Japan, right? All right. Anyway, that's my trade to hold FXY long, EWJ, just off these recent highs. This is my Nikkei minus the bottom 15%. DAX, just off the highs. I still want to get a pullback on the DAX. I think this looks pretty good. This is a lot of Eurozone spending that hasn't happened very often. FTSE, same thing. If we get some chop and consolidation, this is still very well supported around like 84, 8,500. Argentina, fine. I'll probably just I'll consider this one at the 200-day. China, still choppy, looking okay. Brazil, fine. Latin America, fine. MAGs up a little bit, probably carried mostly by NVIDIA today. Apple is up slightly. Amazon up slightly, but red candle. Broadcom ripping higher. This is over $1 trillion company now. Google hanging in there above 150. Meta, nice little surge yesterday. I still would love to see some pullbacks on Meta. It's just expensive. Microsoft, nearly at all-time highs again. Netflix, just off all-time highs. Nvidia again, but just in the earnings chop, but getting higher. Tesla, better on the day after a 3-day pullback. Berkshire, pulling back to the 200-day moving average. Bonds, okay. We kind of put in an intermediate bottom here around 83.30 on TLT. I think the pressure continues to mount. Look, there's about a 4% yield on TLT. Is it good? I don't know. It's not good if price goes down another 10%. It's a wash, right? If you get a 10% drawdown with a 4% yield, it lowers volatility, but you're still losing on bonds. So I don't love this trade, which is why I'm actively like selling calls in a diagonal spread to try to lower this. My expectations on bonds is just stay stable and let me lower my cost basis to get out of this trade. I've got a decent amount of contracts on the diagonal spread. I'm not trying to look to, if we were ripping to 96, 98, 100, I would make a lot more money on TLT. I don't love this trade. So I'm just trying to work my sell call side of the diagonal spread lower. 10-year yield, still super sticky. Yields are not coming down. Fed's not looking to do anything this year. Maybe they cut in September. Maybe they don't. That's also going to be an interesting surprise this year if the Fed doesn't do anything. Podcast I listened to last night. This is a former Fed economist talking about it's not anything that you don't already know. It's that the Fed is reactive, right? The Fed is always late. It's always late. It's always late to tighten too much. It's always late to loosen too late. And this gentleman's argument, his name is Lacey Hunt. His argument was that the Fed is already behind, and what is happening with like the money supply going up, that was really a front run of tariffs, and that realistically, like money supply is decreasing and numbers don't look as good, and the Fed's going to be behind again to possibly have like a reactive cut like they did last year. Now, if the bond market reacts adversely to that, like it did in September of 2024. It's probably not a good thing to see these yields go down. Like these yields would not go down just like they did last year. Fed cuts rates, and what do the yields do? The opposite. So and I said that this year, that's my biggest concern this year is that the Fed cuts rates September onwards, and we're up here at a 5% yield. So do we drift to 5% and then cutting rates starts to bring it back down, and we're still at higher levels? That's that big refinancing air pocket that everyone's worried about in 2025, because by like September to end of year, everyone that needs to refi is potentially facing a huge increase in refi rates. Homes during COVID, you could get a sub 3% mortgage. Now it's 7%, right? If you're borrowing for a business and you're borrowed at 1% for PPP loans, now you're paying back at 5 or 6 or 7%. Companies can't afford that. So anyway, we'll see. All right, currencies. Let's do a quick jump in currencies. Dollar and CAD on top today. Pound just in the trailing in third. We have the Swiss and the yen weakest, so safe haven is kind of low on the day, which I'm totally fine with. My currencies, I still like my Swiss pairs. Aussie Swiss still watching. Can I get another surge like this little pullback? Do we run up into this cluster and 200 moving average? I might take some profits there and then reload. So I'll hang on to that one for a little bit. My Aussie New Zealand, I might just have to dollar cost average in to lower this take profit. This is a small entry. I'm just going to probably buy this thing more and then hold out for this 106 or I mean the swap is now positive to hold Aussie New Zealand long. So I'm going to throw in another trade and see if I just take small trade, probably a 4,999 unit size, and then start doing a 5,001, a 5,002, 5,003 over here. Unit wise, I'm going to get way bigger. If we come back down to lows, I'll get way bigger. And I'll position this one. I'll probably put a 1 or 2 standard lot trade on Aussie New Zealand if I can scale into it. Aussie dollar, I still think a pullback is coming here. CAD Swiss, let's get a run up to this cluster. Yen pairs, they're not my favorite. Euro Aussie, Euro CAD is still chop suey, but if you sold this thing high enough, you're okay. Euro Swiss, hopefully we're making our way back to like 96. My charts are frozen. Cool. All right, let me see what the timestamp is on this SPX. Are we still in profit? Are we not in profit? So back up in profit, back up in profit. I'm trying to get this one to like 50 to 60% profit. 50%, it's like I don't want to be greedy. I know the mechanics of this trade. I don't want to hang on to it all day necessarily. So we'll see. I'll give this like another maybe 30 to 60 minutes and see where it's at. Okay, there's my Euro Swiss. I'd like to see Euro Swiss get back to 96 and change. Euro Pound, nothing. Euro Yen, nothing. Euro New Zealand. To me, this is support off the 144 200 moving average. Euro dollar, I'll wait this thing out. This could be consolidating. So if it's high, low, lower high, lower low, maybe some of that, maybe this thing comes all the way back down as well, and I build this up and it goes back to retest the high. I'm going to be patient on this one. It's not a big deal. Pound Aussie, nothing. Pound CAD. If you sold this thing nice and high at 87, that was a pretty good trade. I think this is still range bound. Don't let this thing go too much higher than 88 though. 8800 is probably my stop area, just above that. But if it stays committed to this resistance, then we could roll down to like 81. Pound Swiss looking a lot better. If you're holding long Pound Swiss, I still like the 1250 to 1350 window looks pretty good. Pound Yen, nothing. Pound New Zealand, nothing. Pound dollar somehow it just keeps grinding. I'm not trading this one yet. If we break this trend line, if you're watching this one carefully, maybe breaking the trend line is a little sell trade. I'd obviously want to sell it as high as possible. I'm not scaling in to anticipate this one. New Zealand CAD, still love this trade. Give me a pullback here and then give me a pullback here. Level 1, level 2, look for a swing. Aussie CAD, very similar. New Zealand Swiss holding. Can this thing get up into this cluster, this support, this 200-day moving average? Again, nice chunk of profit. Do I make more getting up to like 50, 5,000 or 5,100? I'm hoping this is all a big swing for 1, 2, and 3. I want to take that swing to ultimately take my profit on New Zealand Swiss. Similar to Aussie Swiss. New Zealand Yen, nothing. New Zealand dollar. Wait for a pullback. I think a 58.50 or maybe in this like open space. If I miss this trade, it goes up to 63.50. Fine. Aussie CAD, dollar CAD, not chasing this one. I will only buy this one probably down here, and that's about it. I kind of want to see this like maybe just grind. Maybe it's a falling wedge. It's a really tricky pair sometimes. We got really obvious support. Sometimes it doesn't find it. We have obvious resistance. Sometimes it gets messy. So let's see what happens. Maybe this is a bit of a falling wedge. One trade that isn't terrible would be if this does kind of a falling wedge pattern and we get back above 3,900, this could be a swing trade bottom and we could go right back up to the highs. This is a pretty large halfway point, which is a lot of support resistance. So if we hold this pattern, get greater than 1.39, then we might be putting in a low that we could swing trade back to the highs. So I might watch that for potential trade. And I think that'll do it for today. So thanks for letting me be your closer. Thanks for letting me rant. Appreciate everyone listening and being here today. And we'll come back and do it again tomorrow. All right, thanks, bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.